Near Protocol is up 99% over the last 3 months. Arthur Hayes has it in his portfolio. The cross-chain product Near Intense has processed $18 billion, and one anonymous Twitter account called it insanely undervalued. Let's take a look at what's true and what's being kept quiet. Near is a proof-of-stake Layer 1 blockchain that was created in 2020. Its co-founder, Ilya Polasukin, is one of the 8 authors of the original Transformer paper, the one that ChatGPT, Claude, and all modern generative AI are built on. That's an important detail because over the last year, Near has aggressively rebranded from a scalable Layer 1 to a blockchain for AI agents. Technically, it works on the principle of sharding. The network uses parallel chains, processing transactions simultaneously. Thousands of transactions per second with low fees. The network runs stably, but the total value locked in Near DeFi is only $182 million today, according to DeFi Llama. That's low for a Layer 1 with a market cap of $3.5 billion. The market cap to total value locked is 19 times, which is an extreme narrative premium. But the real engine of this year's growth isn't called Near Protocol. It's called Near Intense. It's a cross-chain swap and settlement layer that lets users write, I want this for that, and the network does it across blockchains without a bridge, without delays, without technical setup. The numbers that Intense is showing today are extremely strong. Over $18 billion in cumulative cross-chain volume confirmed by Raptor Group as of May 2026. $5 billion of that came in just the last 3 months or so, since the end of February 2026. $33 million in collected fees. Distribution is driven by the Telegram hot wallet, which has over 1 million users, as well as through Stellar, Kyber, and Infix. That's a massive distribution network. But now for the number one but. Lashmi wrote in a tweet, 542,000 unique paying users. In reality, it's 541,000 distinct addresses according to Dune Analytics from January 2026. But distinct addresses aren't unique users. One bot has hundreds of addresses, one user has dozens, and this is data over 6 months old being presented as current. That smells a bit fishy. The second part of the thesis is based on AI infrastructure. Near has released 3 products in the last few months that are verified by primary sources. First, Iron Claw, a confidential GPU marketplace, announced at NearCon on February 23, 2026. The idea? Renting GPUs for AI training and inference where data remains encrypted in an isolated runtime. The GPU operator can't see it. Confidential Intense, live since February 26th of this year, according to KuCoin, a privacy execution layer for cross-chain transactions with support for 150 assets. The Near AI Age of Layer. Polasukin is working on a layer where autonomous AI agents can hold money, sign transactions, and provide services to other agents. That's a legitimate technological leap. The team is strong. The team has an AI background. The team has distribution. If the thesis that AI agents will pay for on-chain services holds up, Near is in a very good starting position. In the podcast, Hayes repeatedly emphasized that Near is fully diluted, meaning there are no more locked VC tokens waiting for an unlock. That's true, but only halfway. Circulating supply and total supply are currently 1.29 billion Near tokens. VC unlocks from April 2020 ended roughly at the beginning of 2025. Hayes said 3 years. Actually, it was 1 year, so no big VC dump is coming. But that fully diluted framing is untrue. Near doesn't have a maximum supply. Inflation continues indefinitely. Today, it's at 2.5% annually, which means about 32 million new tokens per year. Constant sell pressure. And now for that governance moment. Hayes said in the podcast, the community mentioned whether they should reduce inflation. Near reduced it. The reduction from 5% to 2.5% actually happened on October 30th, 2025, but Brave New Coin documents it like this, even though the previous community vote failed. In other words, the community voted against it. The Near Foundation reduced inflation anyway. After the announcement, the price dropped 8% to $2.1. That's a governance red flag that wasn't mentioned in the podcast. This is the section where we look at things that neither Hayes, Palushkin, nor Lashmi mentioned. First, total value locked is stagnating while intense volume is exploding. DeFi Llama shows total value locked in October 2025 at 162 million, May 2026 at 182 million, a 12% growth over 7 months. Intense volume for the same period is up 500%. This means that the value of Intense isn't being captured in Near DeFi. Liquidity flows through Near like a bridge, but it doesn't settle there. Second, not all fees from Intense go into the Near buyback. Palushkin said in the podcast, we take fees from every transaction and buy back Near. VMAX clarifies this. Fees from Near Intense are split among multiple channel partners, not fully captured by the Near protocol. What portion of those 33 million in fees actually flows into the buyback isn't a public figure. That's a key unknown for evaluating the entire thesis. Third, the no points farm, no airdrop hopium claim is false at the ecosystem level. Lashmi claimed that near intents run without incentives. Near intents, as a core, don't have their own token. That's true, but the distribution partners generating most of the volume have aggressive airdrop and points programs. Hot Wallet is a mining campaign. Refinance gives 10,000 near monthly as trade mining incentives. Delta Trade has Delta points. Kaido to Earn is giving away $100,000 for tweeting about Near. The entire ecosystem runs on incentives. Fourth, the Near Foundation holds a significant share of the supply. Treasury and ecosystem allocations together are approximately 26%. Governance is actually centralized at the foundation, not distributed among token holders. Fifth, competition. Tau, ICP, Render, Apache. Each of them is attacking the decentralized AI narrative. The podcast ignores him. Sixth, Hayes holds Near and Zcash. He admits it. It's another conflict, shilling his own position on a major platform. And seventh, the roll-up is sponsored. Pelushkin has appeared there repeatedly. No critical questions about governance, foundation share, fee distribution, or competition were raised at all. So how is Near different from the competition? It has a team with an AI background, a finished cross-chain product with real volume, and Telegram distribution via a hot wallet. What it lacks is a large enough DeFi layer, transparent fee distribution, and decentralized governance. Two scenarios, as I see it. Bullish scenario. The AI agent layer surges, intents top 100 billion, fees hit hundreds of millions, and the buyback offsets inflation. Near grows with AI and crypto trends. With this projection, the price could reach all-time high zones. Bearish scenario. Anthropic, OpenAI, and xAI don't need an on-chain layer from the competition. Total value lock continues to stagnate. Intents go on, but fees remain scattered. What's important to mention here, though, is that from a technical analysis perspective, Near has just reclaimed a very important Tenkan-sen on the weekly cloud, which means any dip back into this territory is a real buying opportunity. And technically, Near is truly starting a new bull cycle. My take. Near has a legitimate tech story, a strong team, real numbers and intents, and a relevant AI narrative. It's not insanely undervalued, as Lashmi writes. A 19-fold market cap over TVL is a narrative premium. And it's not fully diluted in a real sense because inflation continues forever. But as I said, from a technical analysis perspective, it makes sense. And they say that price leads the narrative. But as always, I'll remind you, this is fundamental research, not investment advice. Everyone does their own analysis. Everyone carries their own risk. If this deeper analysis makes sense to you, let me know in the comments what to look at next. Thanks for watching. Take care. Bye.